Gentleman from Missouri for 5 minutes.
Thank you, Mr. Chairman. In your report and in the summaries that I've read, you talk about the different causes. I have yet to see in there the community banks, credit unions, insurance companies, household lenders. Were they a cause of this debacle?
I do not believe that community banks were a driving cause of this.
Okay.
They had large real estate portfolios, but the primary losses that set off the cascade in 2007 were driven by the larger, first of all, non-bank financial institutions.
Okay.
Then it went into other areas of the shadow banking, but they have suffered greatly. I might add tons of community banks and.
Well, this is where I'm going with the
Sacramento.
question,
Yes.
Honorable Mr. Thomas. Yes, sir.
Yeah, community banks basically, when you move from that model of originate to hold to originate to sell, got pushed out of the home mortgage market
Right.
pretty significantly. They wound up in the commercial market. And although a number of local community banks have failed hanging on to that, it was the depreciation of property and not the similar problem with synthetic CDOs.
Okay, so basically you agree that they were not, the list that I gave you, they were not some of the root causes of what happened?
Certainly not root
Okay.
causes or fundamental.
So even though they were, as a result of Dodd-Frank, all of them were drafted into that.
Yes.
And other regulations were put onto them.
That's in part an example of overreach, in my opinion.
Okay, that's where I'm headed. One of the things, as a former regulator myself, to me, as I go through this process of what you've detailed, the numbers of things that you've listed here as causes, over and over again, it's not necessarily the lack of regulation, of a regulation that's there. It's the lack of enforcement of the regulation. And then when we go to Dodd-Frank, we create a new bureaucracy of the Consumer Financial Protection Board, which in my mind, it's kind of like at home, if you have the fire department that doesn't work, not answering the fires, instead you go out of firing everybody and going out and putting a new group in charge who will do the job. We put another fire department in place that we've got to pay for that actually, unless we give them the right tools and the right job and they do the job they're supposed to do, we're not going to improve ourselves. And so I guess I ask the question, in Dodd-Frank, do you see solutions to our problems, not from the standpoint of more regulation, but from the standpoint that we will enforce? Do you see a reason to believe that this is a true solution from the standpoint that you see a willingness to enforce from all the different agencies that you haven't seen before?
Very quickly, in our conclusions, we did say that there were powerful regulations on the books that were not enforced, and I would hope that the regulators would have the backbone, political will, and your backing to enforce. But I do believe that there were big gaps that Dodd-Frank does fill. It cuts off regulatory shopping. It does create oversight over non-bank financial institutions that kind of escape scrutiny. So I think it filled some important holes. But I will say that there were powers there. Dodd-Frank helps make sure that the gaps were closed: derivatives, shadow banking markets, credit rating agencies.
Very good. Thank you. Chairman Thomas, and if you could add to that, do you see some gaps of things that we need to put in there as well?
Yeah.
Very quickly. I got another question.
We can fill every gap, and the next time it will be something we hadn't anticipated. So when you talk about overregulation, I think this committee especially and others in the Congress have an enormous responsibility in the oversight. Yes, Dodd-Frank has become law, but as the administration begins to move in the direction of regulations, you ought to bring them in and examine it again, because I think many of them overreach. I think some of them were off-the-shelf concerns that people have been worried about literally for decades that may not directly apply to the concerns that you might have. Yes, you do need to have oversight and regulation, but if you have so much that nothing bad goes on, you don't get the dynamic financial flow which has made this country what it is. And it's always going to be a judgment question.
I apologize. I got one more question to ask. With regards to all the hearings that we've had so far, and as we go through the review of Dodd-Frank, I have yet to see anything that says something about pre-approval of any of the new financial products. You know, through this whole last 20 years, we've had a whole lot of new financial products that have come to the marketplace, most of it without regulation, most of it beyond, in fact, with the derivatives market, beyond regulations we found now. Do you believe in your discussions and through your findings that we need to have some sort of mechanism in place to pre-approve new financial products, or you want to allow the market to continue to develop all these new products and then after the fact regulate them?
30 seconds, please. The
Yeah,
time of the gentleman
I
expired.
think the most valuable thing, rather than try to set up pre-approval, is to have transparency, to let the marketplace see what the upside and the downside is, and then make sure people can get the information so that if you have full disclosure and transparency, I do believe most of the problems that we faced will be at least moved to minor items.
Okay, thank you.